Hey everybody, welcome back to another episode of Not Financial Advice. On today's video, we're going to be doing an analysis of Amazon's fair value using Anthropic's Claude AI large language model. And so I'll ask you to like the video, subscribe to the channel, and now we're going to get right into it. So happy Thanksgiving, everyone. We're starting here, just taking a look at an overview of my entire investment portfolio, which is about $1,500 light, as some stock splits were not accurately recorded here. So sitting around 92, $93,000. But the topic of today's video is, in fact, Amazon stock. It's my second largest holding, as well as my top largest individual stock that I own. I also have it represented in several other places. And so I've got a really overweight, I think, exposure to Amazon compared to the whole market. And I think that's because over time, the stock will return higher than market. But we have to understand what the fair value of the stock is. So we're going to jump into that right now. As you're sticking with me, I'll ask you to like the video and subscribe to the channel again, and we're going to get right into it. So you can see Amazon stock here up 230,000% from all time. You can see previously in the past, this has just reached escape velocity strongly over its previous all-time high. The all-time high previously, would have been somewhere in this 186 range. But taking a look at that, the big psychological number was 200. And now we're a solid almost 11% above its previous all-time high. And this chart here is looking very bullish. So it tested 200. So it hit 200 there, and now we're bouncing up higher off that, up almost 3% from the last time we touched that psychological resistance number. So stock here is currently looking to be valued at about $206 a share. Or at least that's the market's price put on it. So let's see if we can get an idea of what Amazon stock is valued at with the assistance of Anthropic's new Claude AI large language model. So we're going to start off and look at Qualtrim.com. It's a suite of software that I pay for. Not one that I'm affiliated with, but it's a great piece of software for looking at stocks. So we haven't done this in a while. I haven't done a video like this in a while. So if this is your first time checking out the video, this is sort of what you can expect to see on my videos moving forward. So forward PE on Amazon looks to be about 33 times. You can also see a little bit less than a percent of free cash flow yield after stock-based compensation. So just okay. Not really great, to be honest. But additionally, we can see some other factors here. So let's take a look at the revenue growth on Amazon. Up and to the right looks to be holding steady. 10-year average is about 23%. 5-year average is about 20%. But here in the last few years, around 10, 11, 12%. So we can see that nice steady ramp in revenue. Looks really good up and to the right. So next metric that is important and we want to take a look at is going to be free cash flow. And so it's up and to the right. This was a result of COVID needing to build out infrastructure to essentially pull forward or double the distribution network for Amazon. Now, one thing that we don't love seeing is I would want to double check that this is right, but it looks like they're increasing stock-based compensation, which is bad. It dilutes shareholders. They might be looking to attract new talent, new programmers to be able to fully implement and exploit AI. And I guess a note on this: they're in an investor in Anthropic as well. Recently, have put $4 billion into the AI firm Anthropic, and so even more salient for the topic of today's video. So looking at everything again, free cash flow, it is going up and to the right. There's sort of a trend here, so that's looking good. Now, with that being said, another thing that's important is going to be cash and debt. So cash is going up and debt is high, but it's moving lower. So that looks pretty good to us. We also are going to take a look at earnings per share, and this is going to be one of the ways that we're valuing the stock as well. This is where it's really shining. Over the last 5 years, looking at over 20% earnings per share growth. Anything in the high teens is really good, so that should benefit the stock performance moving forward. So we like what we see there as well. 2 or 3 more metrics here. They're currently diluting shareholders to the tune of about 1.25% per year. That's not great, but there's different ways to look at it, and that's not a huge amount of dilution, so not the end of the world, I suppose. And very, very importantly, returns on capital employed. So if you buy stock in Amazon or buy bonds issued by Amazon, how able is Amazon able to take that money and then convert it into profits? And so we're seeing return on capital employed sort of in this 10, 11, 12% range. Just okay. It's a huge company. So there's only so much bigger that they can get, but we're looking for more. At the end of the day, free cash flow is where we want to end our position with Amazon, just with it spitting off free cash flow. They develop out the infrastructure to meet the demand for their retail business, but now they're doing some more capex surrounding things like AI and AI integrations for AWS as well. So, lastly, we're seeing their profit margin, from recent history, as low as half a point, moving up over 5%. So that bottom line profit margin trajectory is looking really good. If you're with me, go ahead and like the video, subscribe to the channel. Now let's get into our Anthropic AI sort of one pager. So it took me 3.5 years to figure out the questions to ask Anthropic AI for it to actually produce a pretty awesome research report, not only with qualitative but quantitative stuff. So I'm just going to go through this real quick. And if you didn't know, so via Anthropic AI, Claude's LLM. So, company overview. Amazon is a global technology leader in e commerce, cloud computing, digital streaming, and artificial intelligence. All right, interesting. Also, pretty big in advertising as well. And so we talk about the Amazon retail business, cloud computing, AWS, advertising here, yes, Amazon Prime, web services, Prime Video, as well as properties like Twitch and their new stuff that's sort of in the medical space, like digital pharmacies and stuff like that. So, shares outstanding. So you can't just trust AI, not in the end of 2024, maybe next year. But I double checked everything. So looking at Qualtrim, for the most part, it looks like the cash that Anthropic found was about right, but the debt was weird. Excuse me. Excuse me, didn't look right. So I've sort of highlighted that in yellow to say that I needed to do a second look on that to make sure that it was accurate. So still overall pretty helpful, excuse me. But it talks about stock-based compensation, which isn't good. But it's sort of reply on how much return on capital employed it has. This is directionally right. And so that's really cool just to be able to plug a prompt into Claude by Anthropic and get good information out. The trend of the gross profit margin was directionally and as a percentage pretty dang close, both for top and bottom line, also known as net profit margin. So all of that looks pretty good. Free cash flow numbers were wrong. So Anthropic has data that's about 6 months old. And so this was not right. They were negative in 21 and 22, I believe. But that was sort of a black swan event. And so somehow it managed to come up with a number of about 26 billion. I actually think that's a pretty decent starting place to look at the profitability of Amazon from a free cash flow basis. I am biased. I do own it. I'm very bullish on it. But looking at 26 billion, let's jump back over here real quick. Let's look at free cash flow. So if you just sort of look at the continuation of this line here, they were at about 26 billion here, and if you can just see the trend, sort of smoothing that out, I don't think that was a horribly wrong assumption. So if actually, even though it's not numerically correct, this might be a sign or a coincidence that the AI is having some decent level of inference. So I actually liked the projected growth rates for cash flow from Anthropic as well. 15% years 1 through 5, 10% years 6 and 10, and then a terminal of 3. I changed that to 5 for some of my valuations. But what we'll see here is when all was said and done, I asked it to value the company based on different discount rates, which in so many words is just how much money do you want to make off the stock. It valued the stock at $198. So we're going to come back to that, but that's pretty interesting. So not a lot of work I had to do, or at least you had to do to be able to have me run that in Anthropic. So Anthropic thinks Amazon's worth $198. Let's take a look at what some professionals have to say. And so we're seeing here on Morningstar that they actually value the stock at $195. So that's really close. It's definitely something that's of note. So we're going to come back in here. I've done some of the sort of human oversight and I've done some different valuations on it. But we'll touch on this real quick. It's showing that its historical PE range is 70 to 90, but the current PE is 58, and then the forward is lower. So it's low on a PE multiple valuation, relative valuation, but it talks about its moat. So sort of the e-commerce platform and AWS being, industry market leaders, logistics and distribution networks. So we've already paid for that with capital expenditures, advanced AI, et cetera, et cetera, et cetera. Um, and then it talks about its competitors, be it Walmart, Alibaba, or things like OpenAI and Google. So that's all really good data that Anthropic just split out. As the data is about 6 months old, some of its stuff I asked for technical analysis isn't going to be quite right. But moving forward, or maybe if I pay for the pro version, I'd actually be able to spit that out to help me figure out a good entry point or point to add. And so what we'll do here is now drop down to the different valuations that I've done. So I ran a DCF valuation manually as a human with a human brain. And I also ran a PE multiple valuation with my human brain. And so here are our results, guys. If you stayed with me this far, please like the video, subscribe to the channel, leave a comment down below if you got value out of this. I really appreciate you guys sticking with me. So what we've learned here was pretty interesting. So AI thinks that Amazon's worth $198 a share. The pros think it's worth $195 a share based on free cash flow. My human brain says $96. And on a PE multiple, which is sort of in that technology company that's still growing, which Amazon is, as much as 380. So the average between the four is $217, with AI saying the value is around 198, but averaging it, I have a value of about $217. I actually think that's pretty dang close. And so that leaves us with its current share price as being slightly undervalued. But after the run up that we've seen here, it's probably getting pretty close to full value. So you could, start to DCA in based on your own professional research and advice, understanding this is not financial advice, but technically everything looks fantastic. I'm long in Amazon and I look forward to great returns from it. So thanks for tuning in. Again, this is not financial advice. I'll see you on the next one.